If I don't buy SoFi stock now, am I missing out on the next big fintech revolution? That's the question that many investors are asking me, and we're going to answer that today by deep diving into it. We're going to explore SoFi's expanding product lineup, the new credit card offerings that are out just, and of course, what's happening at the upcoming earnings. I'll even walk you through how we might trade the thing by looking at the actual stock chart. Now, the more I personally trade and invest, and the more I deal with the 12,000 students that we have, the more I realize that what really separates the winners from the losers are rules, the right rules, the rules that Wall Street actually use. And I, for that reason, recorded a completely free masterclass for you. It's like 30 minutes long. And I'll give you the strategy. I'll give you the 4 rules that you have to tick to see when a stock's about to explode. We call it a breakout. If you want to learn exactly how that works, head over to felixprehn.org/getfree, felixprehn.org/getfree, and become hopefully part of the 1 million people we aim to make financially free here in our lovely little community. Now, for SoFi, first up, we've seen a remarkable surge in institutional ownership. Just a month ago, institutions held about 45% of SoFi, but in less than 30 days, those institutions scooped up an additional 20 to 30 million shares, which is an extra 2% increase in institutional ownership. And you might be thinking, why should I care about 2%? Well, that's not small potatoes. And this rapid increase is accelerating our timeline for reaching that 60% institutional threshold target, which is kind of where we want to get to be in line with Wall Street banks. And to me, that was a very long-term goal, sort of 5 years down the road. But at this rate, we could actually hit that within a year. So game-changing stuff. And what does it mean for you and me as SoFi investors? Well, you'll see the stock price going up. Because if those guys keep buying, if they gobble up more shares, then we might be heading towards that $12 to $15 range in the next 9 to 12 months. Secondly, as more institutions move, as more shares move into institutional hands, the public float, so the number of shares actually available for regular folks like you and me, decreases. And that might lead to sharper price movements. But at the same time, you have this massive group of shareholders who don't really trade that much. Institutions tend to hold, right? So it's going to give SoFi a credibility boost. If all of Wall Street owns it, if all the pension funds owns it and so on, and it makes it more acceptable as an investment. But let's look at some numbers. Why are these guys, institutional guys, buying SoFi? We have a price to sales ratio of about 6 to 7 times. That's an increase from our previous projections. The EV/EBITDA multiple is also getting a nice bump, now projected at 16 to 18 times going into 2026. And what does it actually mean for price tags? Well, in the short term, we're looking at $10 to $13 per share, which is a 25 to 60% upside. That's pretty significant, right? From the $8 something we're trading at right now. And then in the more medium term, we're looking at 15 to 18, and long term, we're looking at that 28, maybe even $35 target, which is what Anthony Noto is gunning. Now, there are no guarantees in life. I think you know that by now if you've been in the market long enough. However, with interest rates expected to continue to fall as she get cut, SoFi's lending business could become a heck of a lot more attractive. And therefore, again, more institutions should buy it. Now, let's talk products. Let's talk actual business, because ultimately, the stock price is a reflection of the real underlying business. SoFi has just introduced not 1, but actually 2 new credit cards. SoFi Everyday Cash Rewards and SoFi Essential Credit Card. What do these little bits of plastic do? Well, the Everyday Cash Rewards card is designed for those of you who love to wine and dine. It offers a 3% unlimited cashback on dining, including restaurants and food delivery services. So for the grocery shoppers among us, there is a tasty 2% unlimited cashback on grocery and convenience store purchases, both in-store and online. And for everything else, you still get a 1% cashback, which is not too bad. So why is the card special? Well, it's the unlimited part. That's kind of got me excited, because many cards cap your rewards. These guys don't. And then we have the SoFi Essential card. It's basically for people who have never really had a credit card before, or those who want to maybe rebuild their credit journey. And there are no fees, no surprise fees, so no annual fee, no over limit fee, no foreign transaction fee. And they're basically saying it's just simple. It's just clean and simple. So why are they not just doing one card with all the features? Well, it's about market segmentation. See, the rewards card is for those who want to maximize their spending power, while the essential card is for those focusing on building that solid credit foundation, a little bit more penny pinching, maybe a little bit lower income bracket. But they're not just standalone products, they're part of the overall strategy. By offering these cards, SoFi is creating more touch points with its customers. They're weaving a web of financial products around their customers, and therefore they also know a heck of a lot more about you, and therefore they can sell you more relevant products and make more money. And these cards could also help SoFi build an interest-bearing portfolio. So it's a bit like, you plant a tree, a money tree in your backyard, and yes, it needs some tending and so on, but over the years, it'll bear fruit or leaves or nuts or whatever you're growing. So SoFi is planning ahead here. They have a long-term strategy. I like that. But what we really want to unwind here, of course, is SoFi's upcoming Q3 earnings. Now, SoFi's been on quite a streak. They've consistently outperformed their own guidance quarter after quarter. They are just out-delivering. We shouldn't automatically expect this trend to continue. Past performance doesn't guarantee future results, but it sort of does. Not guarantee, but it's an indicator. If management is good, they're likely to still be good the following quarter. So Noto is basically a sandbagger. He underpromises and then he overdelivers, which is a smart thing to do. And with recent interest rate cuts that we've had, SoFi might have some extra wins in their sales, which could boost that business quite significantly. So let's look at the actual numbers. They're guided to about 635 million in revenue for the quarter. Given their history of beating estimates, I wouldn't be surprised to see them land quite a bit north of that. And let's look at profits. EBITDA is what they use. Charlie Munger returning in his grave. He hated EBITDA because it's adjusted and all of that, but it's a number. Let's look at it. We're expecting about $162 million here. Again, their track record is that they beat that estimate every single time. So expect a number somewhere north of that, which also means the market's expecting a number somewhere north of that. So they actually need to beat by more than last time. But the real kicker will be GAAP net income. That's real hard cash, sort of Charlie Munger cash. And that's a new metric for SoFi. They haven't really had that for all that long. Now they're guiding for 42.5 million in real hard GAAP net income, which would be a nice boost on year-over-year numbers. If they beat that number, I think the market could get really excited about this. And then, of course, we look at member growth and product growth. And they're kind of the lifeblood of the long-term growth story for SoFi. And we want to see that number blow up as it has been. So what do I expect? I expect the lending segment to still be very slow because that was intentional and they were doing that. But I might expect them to come out and say lending's going to pick up going into 2025. And that's home loans, that's student loans, and that's refinancing particularly because say we get at least 1 or 2 more rate cuts this year. That means interest rates will be down 1%. It actually starts to make sense to refinance your loans if you can pay a percentage point less. So you're going to give SoFi a ring and say, hey guys, what can you do for me? And therefore they will get a lot more volume and a lot more money. But the real crux to the success of this earnings event actually won't be quarterly numbers. It'll be the outlook for 2025. What is Noto going to say with regards to interest rates changing, how he sees the market, how he sees the US economy? And bear in mind, he's usually a sandbagger. He's usually a little bit of a pessimist, and that allows him to then surprise us to the upside. The real reason, one of the many reasons, but one of the biggest reasons I like SoFi, they have the most motivated CEO on Wall Street. Remember the $103 million compensation packet for Anthony Noto back in 2021? It seemed excessive, right? A lot of people were saying, that's crazy. Why are you paying him that much? Well, 94 million of that is in cash in hand. It's performance stock units or PSUs. And that's where it gets interesting. Those PSUs are tied to some pretty ambitious stock price targets. 1/3 of the shares vest, so he gets them at $25, another third at $35, and the final third at $45 a share. And Noto has only got until summer 2026 to hit these targets. That's 20 months from now. So why am I bringing this up? Because our interests are insanely closely aligned with Anthony Noto. He only wins if we win, and win big. So I leave you with that little note to chew through, and come and join us and watch my masterclass and learn how we are going to trade this. How are we going to spot the next SoFi breakout or the next breakout on any stock? And then how do we exit at a profit? Because I see it again and again. People get in there, it does well, and then they exit too late. Or they buy something and it collapses and they hold on for years and they become bag holders. All of that is avoidable with just very simple rules. So come and learn them with me. felixprehn.org/get-free. That's our mission, and I love you for watching. Tom Lee has just released his top stock picks for October. Top 5 stocks that he absolutely loves. And fairness to the chap, he has been consistently ahead of the curve.